Time for another stock review, this time Snowflake. We're talking S-N-O-W, Snow. What's it all about? Well, in this review, we are talking AI once again. So here comes our robot. Can we make some money with this? We're reaching out together, looking at the chips, the AI, the data. It's all swirling around in our heads. Can we make money from this stock? At the end of the day, it's all about making money. We're investors after all. So can we do it? Well, let's get straight into it. Let's take a look and see if you can make money from this stock. Now, in this review, you're going to get the most honest review you've ever seen on YouTube, TV, and Rumble, because everything here is real, genuine, using the most advanced algorithmic software. No one here pays me or sponsors me by the company to talk about it, but we are going to share the balance sheet, the profit, the loss, the insolvency score, giving you the inside trading. We're going to give you all the facts. We're going to give you even things like we're going to take a look at the website, the latest news, back test against the S&P 500, a corporate overview, big events coming up. All of this stuff you don't want to miss. It's all happening here on this review. We also have a Meet the CEO series as well, where you can invite the CEO onto the show. I'll explain to you how that happens in a moment. Shall we get into it? Shall we see if we can make some money? So first thing you got to do, of course, is like the video, subscribe, and support the channel. If you leave me your comments below, I will reply to all your comments. Now, we will start off, that's all the members' comments, that is. We will start off nice and simple, basic stuff, and then we'll get more and more depth, deep into it, and we'll see if this is a good stock for you to buy, own. Full disclosure, I only own the S&P. I don't own anything else. The reason for that is so I can be fully impartial. I took the decision to sell and get out of the way of the robot. Here he comes again. Look, I told you I got out of the way of the stock so I can be honest and real, and there's no influence here whatsoever. Just trying to give you the information. Now, also using this software, it's Alpha Spread. I do use this software. You can get a free version of it. And my members can get a free version of a premium plan, which basically makes my membership for free if you get the premium plan. So it's all good stuff. Also below in the description of the video is information on how to invite the CEO onto the show, and I'll come on to that in a moment, so bear with me. Okay, without further ado, let's get straight into it and see if this makes sense for you. Okay, what is Snowflake? Snowflake, as you can see, opened back here in 2020, and we popped up, we fell all the way back down, we popped up, we fell all the way back down, and it's been trading quite aggressively. So it's a trading stock, certainly opportunity here to make money short term. Is it a good investment long term? Well, let's have a little look. Snowflake Inc. provides data cloud warehouse software. This includes a data cloud and ecosystem where Snowflake customers, partners, data providers, and data consumers can break down data silos and derive value from the rapidly growing data sets in secure, governed, and compliant ways. Its platform supports a range of use cases, including data warehousing, data lakes, data engineering, data science, data application development, and data sharing. The cloud native architecture consists of 3 independently scalable layers across storage, compute, and cloud services. The storage layer ingests massive amounts and varieties of structured and semi-structured data to create a unified data record. The compute layer provides dedicated resource to enable users to simultaneously access common data sets for many use cases without latency. The cloud services layer optimizes each use cases performance requirements with no administration. Snowflake was founded by Marcin, or is that Marcin? Marcin, we don't know. I'm going for Marcin Zukowski, Thierry Cruanes, and Benoit Dageville on July 23rd, 2012, and is headquartered in Bozeman, MT. The listed name is Snowflake. Right, Montana, based in the United States of America, Bozeman, Montana. Okay. What about the employees? 7,004. 7,004. Now, the CEO is Sridhar Ramaswamy. Sridhar, we'd like to invite you onto the show. Now, the way we do this, we have a Meet the CEO series. I actually never message anyone. I don't believe in selling myself to be on the show. How it works is investors come to you and say, you can be on the show and share your news to the world and tell everybody all about it. If it's good, we'll tell the world. If it's bad, we'll also tell the world. We're here to be the most honest channel on YouTube TV. And the CEOs that have been on our show and the ones that are coming up are coming on because they prefer being here than Bloomberg and CNBC. They've already told me that because they like the honest approach and the conversation and all the rest of it. We're here to help people, not to promote businesses, but we want you to do well. We want to help you grow and all the rest of it. But we just want to report the facts to people that they can make wise investments. So I'm sure I'd love to have you on the show and hear all about it. So how could we get you on the show? Well, you will hear from our investors, and our investors who are listening to this now, create a social group around this stock. Perhaps you might put together a Facebook page or a Reddit channel or whatever it might be, and I'll provide you with the reviews. I'll even cover the earnings if you ask for it. And you can have all the information. And then below in the description of this video is also a invitation to the CEO video. You might like to send that with this video to the CEO or investor relations, or put it in a group and share it around, tag them in it. Many ways. And once they correspond with you and get interested, then put them on to me and I'll get them on the show. But I'd love you to take charge of it all and be passionate about the company that you care about. All right. Okay, now for buying this on margin, it's 25%. Even though it's been quite volatile, that's quite a surprise to me. I thought that would have been higher than that. So that's good. Maybe it's a good stock. It's just being traded, but it's still got a good foundation. That's always nice to see. A stock that is trading a lot presents opportunity, but 25% is the lowest level of margin. So that's good for the maintenance. 51 billion is the market cap. 52-week high 237, 52-week low 135. So you can see there's a big jump there. No dividend. It's purely a growth stock. 5.94 million. So it's not huge amounts of volume, and the volume today is just below average at 3.77. Okay, what have we got? Jim Cramer shares his thoughts on J&J, Ollie's Bargain Outlet, Fox, and Snowflake. Jim Cramer, there's a ETF against Jim Cramer. People actually bet against what he says because more often than not, he is there to shout booyah, throw little silly toys around the studio and create dramatic TV, but it doesn't really, it's not always the best information, if we're honest. It does get people excited, and CNBC and Jim make a lot of money out of that. I don't know how much money the investors make because more often than not, he's wrong. But so we're not going to take a listen to what Jim Cramer says. That would be a complete waste of my time. Anyway, analysis. Let's have a look. Buy strong. We got a strong rating. Now, this was done by Morningstar. I don't take what they say either because they're influenced and they're paid to say these things. So we don't take too much credence in this either. 67% are saying buy, hold 28%, very few are selling. The bulls are saying Snowflake could expand to other multi-cloud data needs, pushing spending per customer to greater heights. Okay. The bears are saying migration of existing workloads to the cloud could occur at a slower pace, extending the length of Snowflake's unprofitable years ahead. Okay, so let's have a look. Right now, though, that was a bit disingenuous for the bears to say extending the length of Snowflake's unprofitable years ahead. That's not even true. Extending the length of Snowflake's unprofitable years ahead. Well, that's not actually true. We're not a negative stock. We are actually a profitable stock. Here are the earnings, and the company actually makes money. So that's Morningstar. Bears talking absolute nonsense. They're not losing money at all. They're actually making money. Anyway, there you go. That's what you get when you pay a professional for a review. and the earnings are actually moving up as well. So, yeah, that's why you don't pay for a review. You come to me who does it for free. Yeah. JD Power, best cars in the world. If you're a Chevrolet, guess what? Chevrolet pay them to say that, and people buy into it. It makes me laugh. Anyway, the fact of the matter is, Wall Street keep getting this wrong. That would kind of explain why that statement occurred there, because these analysts are trying to sort of say doesn't make any money. Well, anyone who can read can see. Well, yes, they do, and we'll come on to the money in a minute. So that puts me straight on the defensive and looking for the opportunity, because I like anything that reveals facts rather than nonsense. Anyway, we are making money here, and we're consistently beating Wall Street. Wall Street are not getting it right at all, and in fact, Wall Street are getting it worse and worse and worse. We're actually beating expectations by some range. Remember, it's not the company saying they're doing this; it's Wall Street predicting this, and then that's what they're doing. So there you go. Very, very nice indeed. The fact that they've beaten earnings and consistently, that's very, very good. You've got to say, a new company that's consistently going up, beating earnings every time, it's got to be good, right? I like that. So far, it's a tick with me. I'm not going to give it a buy yet. I don't know anything about it. We're working on that. But anyway, who else are you in bed with? Shopify, CrowdStrike, Datadog, Zscaler, Twilio, and Salesforce. Now, honestly, I've not reviewed any of those stocks, so I don't know any history about those. So I don't know how the stock will trade from the point of view of the company it keeps. I don't know. I've not looked at any of these. I've not reviewed them. I have reviewed about 120, 130 stocks, but I haven't done these. So I honestly don't know. So if I don't know, I'll say I don't know. Anyway, let's move on. Can we make money from this stock? Let's go and look over at the numbers and see if it all stacks up and you can make money. So far, I don't know, but the earnings is interesting. The fact that Morningstar is saying that the bears are saying it's losing money when it'll continue losing money makes no sense to me at all. Anyway, let's go. First of all, let's do a back test against the S&P 500. Let's go and look at that. Now, if you put $10,000 here in 2021, you've gone from 10,000 to 5, nearly 6. You've lost about 40% of your money over that period of time. It's in blue. It had a nice little pop and then fell away. You can see it's very volatile because up and down. The S&P is a little bit more flat. It's hard to tell over just those few years. If it was extended out, you'd see that. But here, you don't see too much of it. But the S&P, if you put $10,000, you'd now have 14,000. You made a nice little profit and you'd have done very well indeed. Now remember, companies like this are already in the S&P. You've got things like Google, you've got Amazon. They're all data companies. They're bigger than this. They could buy it out. Maybe they invest in it. I don't know. There are Apple to that extent. There are other companies already in this field, already in the S&P in a basket ETF. So you've got that safety net, if you like. But you can see how it compares to the S&P. There was some volatility there in 21. It's not a COVID-related macro condition, but I'd like to see what spiked that. Now you can find that out, but go into the investor pages and see of the company at snowflake.com and see what happened there and what changed, and then you can see if it's going to happen again. So I'd be looking at that if I was looking to invest. Anyway, let's go to the website. Nice clean website. It's all in this light blue, sky blue color. Let's learn a bit about the company. It's all about data, of course, and the cloud and all the rest of it. So let's have a scroll down. Let's see what jumps out to us. If anything at all jumps out. Leading companies lead with Snowflake. There we go. AT&T, Canva, Weld, other 7,200 brands mobilize their data with Snowflake. I think I'm going to sneeze. Excuse me. I might edit that out. Probably won't. Haven't got time. I'll be on the next review by the time I get a chance to edit this out. All right, Canva. Canva, Capital One, Albertsons. We've got MasterCard. We've got Adobe, Komatsu, Roku, DoorDash, Sainsbury's. A lot of English companies in here. I'm noticing Power School, Microsoft, ExxonMobil, University of Notre Dame. So I think it goes without saying. Cisco, they do have a wide customer base. That's very, very good to see that these companies have entrusted their business in their data with this company. Always good to see. Right, we like that. 2 ticks so far. Good on the earnings, the consistent beating, and Bear's trying to say the opposite. That always puts me on the back foot. And I like the customer base. Okay, corporate overview. Let's have a quick look at the corporate overview just for a moment. I'll zoom it in as much as I can. Snowflake's founders started from scratch and built a solution that would harness the immense power available in the public cloud. They created the data cloud, a global network where thousands of organizations mobilize data at near unlimited scale, concurrency, and performance. Inside the data cloud, organizations unite their siloed data, easily discover and securely share governed data, executive, diverse, and analytic workloads, wherever data or users live. Snowflake delivers a single and seamless experience across multiple work clouds. Snowflake's platform is the engine that powers and provides access to the data cloud, creating a solution for applications, collaboration, cybersecurity, data engineering, data lake, data science, data warehousing, and Unistore. Snowflake's vision is a world with unlimited access to govern data. So every organization can tackle the challenges and opportunities of today and reveal the possibilities of tomorrow. Quick company highlights before we go over to the numbers. Company's highlights. Remaining performance obligations, 5.2 billion, 691 Forbes Global 2000 customers, 4.2 billion and daily queries, 461 1 million plus customers, and 131% net revenue retention rate. Okay, some good highlights there. We'll cover the news in a moment. We'll do it this way. We've got the data event of the year about to happen. Always good. Events and news is always good for the sentiment of a stock. It can drive interest towards it. Snowflake is coming home to San Francisco. Snowflake, that's happening in 2004. I think it's June, actually. Let me just, is there a thing here somewhere? I was just looking at it earlier. I've apologized if I've forgotten. There we go. June, yes, June the 3rd to the 6th. June the 3rd to the 6th. So in the summer, this is happening. At cutting edge innovation, the data cloud has to offer. Discover the latest in AI, Gen AI, Apache Iceberg, streaming privacy, preservation, collaboration, flexible programmability, application development, and much more. Hear valuable insights. Now we can obviously watch this online as well, and maybe we'll cover this if this stock gets a lot of interest and our members request an earnings for it or a special event. We can cover it, and as we start to rank on YouTube and Google, more people will learn about this stock, and we always rank number 1 or 2 for our stocks, as we do for nearly everything now, so that's why we're growing so quickly. So maybe we'll cover that. Right. Some latest news just out a couple of days ago, so I wanted to bring this to you. Exclusive, direct-to-consumer vitamin brand Ritual integrates data. Basically, this is another customer now. I don't need to read through all of this, but this is another customer that's using the services of Snowflake. So a direct-to-consumer DTC startup is leveraging data automation to support expansion with brick and mortar partners. Chain store. Age recently had a conversation with Brett Tranny, director of analytics at Ritual, to learn more about how the digitally native health and wellness company specializing in a variety of women's vitamins is successfully selling its products via brick and mortar retailers, including Target and wholesale, with data support from Snowflake and Crisp. I won't read the rest of this because this is more to do with the company, but again, it's Snowflake sharing the information about another partner using their services. So far, a lot of great companies are using the services. We've seen the earnings go up. Things are looking good. Good to other companies that associated with this stock is good. So things looking good so far. We like data. We like AI. We believe that this is the way forward. But Can we make money from the stock? We're now going to go over to the numbers now and see if it all adds up and our robots coming together. So we get to get out of the way quick. See if we can make money, and let's look over the numbers, shall we? Okay, so without further ado, that's what we're going to do. So here we go. Let's look at the numbers, starting off with the intrinsic value. Now, if you like this video, please do click subscribe and ring the bell. We are live 12 hours a day. We aim to be the most honest, real channel on YouTube TV. That's what we're here to do. And, talk about great companies and bring the facts, information to the world. Okay, let's have a look at the intrinsic value. Currently, we are at $153. Now, AI, all of this stuff is always overbought and overpriced, because just like Nvidia, for example, people want to be in because they know where it's going. However, it can't always fulfill its price. It can't run forever and ever and ever. If stocks are ahead of themselves too much, it's just like saying, would you pay $10 for a can of Coke when it's only worth $1? Well, if it's the only can of Coke on planet Earth and everybody was fighting over it because everyone was dying of thirst, maybe it's worth more money. But we're certainly not struggling for data. Everyone's doing it. So there's AI stocks coming out of our ears. So we've got to be careful not to overpay for stuff. Now, things will grow into their prices, but I have a rule that I only pay 25% overvaluation for a growth stock. A growth stock that can grow into its price, I will pay 25% overvaluation. That's it. Not anymore, certainly not 76. So this might be a great company, but it's too expensive right now when it comes to the intrinsic value. Do we have any warnings? No, we don't. The intrinsic value is regarded as reliable. What is intrinsic value? That is what an intrinsic value is. Let me zoom in. You might want to pause that and take note of why I use this and what an intrinsic value is. It's not the be and end all. It won't tell you whether you should buy it or not. It tells lazy people whether they should buy it or not. A bit like those that use Morningstar, going, oh yeah, it's all rubbish. They're not making any money. When all we've got to do is look down and see that they actually are making money. But there you go, nevertheless. Intrinsic value is too expensive. So I like this company. I like this type of company, rather. I haven't looked at the company yet in detail, but I like so far what I've heard, but it's too expensive. Just like Nvidia. I wouldn't buy Nvidia. It's why I only own the S&P. I want Nvidia in my portfolio through the S&P, but I want the protection of the S&P, not the Nvidia itself on its own, because it's too expensive, right? It can go down 50% overnight, really. Anyway, whereas the S&P is not going to do that. Okay, moving on down. Azakar, thank you for your subscription. This is being made during a live video. So the intrinsic value would suggest it's too expensive. Let's look now at the financials. Tap the like button. I will reply to all of my members, every single one of you. Okay, let's have a look here now. Revenue. 2.8 billion. Yes, MSK during a live video makes a very good point. I'm not trusting Alpha Spread's intrinsic value after Fisker. If it doesn't have enough info data to make an intrinsic valuation estimate, then don't make one. Declare insufficient data. Well, that's exactly what it does do. MSK. I want to answer that. That's why I've just said the intrinsic valuation is the standard for measuring a business, but not on its own. People just look at a stock price, see it as a penny stock and go, it's cheap. And that's the worst thing to do. People look at intrinsic valuations and go, well, the intrinsic valuation says it's too expensive or it's too cheap, and they use that. You got to put the whole thing together. If it was as easy as that, everybody would just be buying the right stock at the right time, which means everybody would be buying the wrong stock at the wrong time. It doesn't work that way. Intrinsic value is part of the puzzle, but not all of it. And intrinsic values are are correct even when the stock price, like Fisker, doesn't do too well, because the intrinsic value was looking at the orders, the balance sheet, the money, the customers, all these things, and it makes sense. But it doesn't protect the company from volatility, doesn't protect the company from sentiment and changing of markets at all. It doesn't do that. It simply presents the valuation at the time, looking at the numbers that we have at the time. There was nothing wrong with the intrinsic value of Fisker, but none of that took into consideration the extra conditions that occurred outside of it. Hence, short interest and everybody dumping the stock and all the rest of it. Bad publicity and sentiment and so on and so forth. So intrinsic value is a great tool, but not to be used on its own. I wanted to just challenge that question there that was presented from MSK. Oh, and by the way, an intrinsic valuation here is going to be universal. It's not, my intrinsic valuation is not different than anybody else's. It's all calculated the same way. Like these numbers, balance sheets, profit, loss, they're all balanced. They're all the same thing. Every website, every outlet will be the same. Alpha spread's the same. Everybody pulls in to the global resources for these companies and displays them in their own portal, their own website, but they're all pulled from the same place. You're not going to get one balance sheet reading from one place and one from another unless it's been updated. But that's a completely different thing. Anyway, looking at the financials, moving on now. I just want to make sure we answer all the questions. Revenue is 2.8 billion, up 7% on the most recent range and expected to climb going forward. Not much of an S-curve though, but nevertheless, a good increase going forward. That's nice. Up 7% on the most recent range. Very nice indeed. That was of January 2024. So we're expecting a new earnings soon. And if my members want to cover the earnings and do a super chat, we may cover the earnings if it's popular. Operating income is negative 2%, but we are expecting to see an operating income very much swing into an S curve. Look at that. That's very nice through next year. Very good indeed. Net income, same thing. Up 4% and expecting an S-curve style. Very, very good indeed. I like that very much. I like that. Good stuff. Okay, what else have we got? That's really important. Investing cash flow down 240%. That is a positive, as you can see. That's very good. Operating cash flow, very nice indeed, up 18%. That's very, very good. All good so far. So far, I like it. It's a bit expensive, but I like the business. I like the company. Let's look at the balance sheet. Is it well funded and does it have too much debt? Let's have a look. 8.2 billion in assets. Okay, of which 3.8 is cash. It's very well funded. Now, we've always said we don't like a company that has loads of cash and doesn't know what to do with it. Say if you have a small cap, let's say you have a company of like 50 million, let's say, for example, and all it has is cash at 50 million. That's great, but that's not a lot of money for many companies to grow publicly, globally around the world. It's a very, very small company. This company's got 8.2 billion. It's a decent sized company, and 3.8 is cash. That's very, very good. Very, very good indeed. And 3 billion liabilities. If we were all debt, it could pay its debts off tomorrow. So, I hardly need to look, do I? No long-term debt, no short-term debt. Very, very good. It's going to have a great, great balance sheet. It's going to have I would imagine, an 80% balance sheet, bright green. I don't know. I haven't looked down here yet. You're looking at the same screen as I'm seeing. That's the bottom of my screen. But I'm predicting we'll see an 80% balance sheet, which is good. But no debt. So that's very, very good. Very, very good. But what's the margins though? What's the efficiency of the company? There you go. It's got proper software management and margins, 68%. You might want to compare it to the competition though, perhaps Google, perhaps Apple, Amazon, all these people, Microsoft. You want to compare it to them and see what their margins are like. So not too bad at all. 68% gross margin. All right. Operating margin is 39% negative. Net margin is negative 30%. But you can see it moving very much in the right direction. All of this is moving in the right direction. So far, I'm liking it. That balance sheet has given me a massive tick. So far, it's a stock I'm interested in. I can't say it's a buy, though, because it looks expensive. But is it expensive? We don't know. Let's find out. Let's move on down. There you go. I said 70. Did I say 70 or 80? Can't remember now. 72. Very, very good balance sheet. It's not going bust. You could invest in it knowing it's going to be around for a while. It's and I say a while because anything can go bust eventually. 72%. 39% profitability score isn't the greatest, but it's turning green and expecting to go higher. Everything ticks off there. Exceptional 3-year revenue growth, positive gross profit, positive free cash flow, and exceptional revenue growth forecast. I like all of that. It's a definite one to consider to buy now. Just is it the right time? Well, let's have a look at it. On the worst case scenario, it's got a 18% downside. 18% downside, worst case scenario. Well, if you overbought the stock, and let's assume it is expensive, and it drops by 18%, it's still regarded as expensive, and that's the worst case scenario. I can live with an 18% because I would expect it to go down 18%. It's too expensive. So worst case scenario, 18% is fine. If that was 100% down or 80, 90, whatever percent to bring it in line with the price, then you definitely want to hold off. But if the worst case scenario over the 12 months is 18% down, when we are still in a bull market, I regard that as not likely to happen, and I can live with it because the average is 46%, way above the S&P. Very good. And what about the high? 309%. This is very, very good. So yeah, I like it. Could I buy it at this level? I think if I was buying it now, I'd buy a couple of marker shares, get my name on the board, look for some drops. There are always drops in the stock. You've seen it. And each time we get a little nibble, just buy a bit more. Allocate yourself, say whatever you, let's say you were spending $1,000. You got $1,000 you want to invest in this company, and you go, all right, then I'll buy $200 worth. Edwin Chow, thank you ever so much for your subscription made during a live video. If I've got $1,000, I might put $200 in. Leave the other 800, wait for a 1 or 2% drop, 5% drop, maybe buy another couple of hundred. If you get a 10% drop, spend the rest of the 1,000. I think that might be the way forward. I could live with that. So that's how I would buy it. So now I'm moving to, yes, it's a buy for me, but that's how I would buy it rather than just, yes, I'd buy it all at this level. So yes, we're now moving to, it's a buy from me, but it's a buy by allocating a percentage of my allocation. An allocation of my allocation, yeah. About 20% of my allocation would be spent now and then try and chisel down on the way down. If not, don't chase the stock. That's how I would do it. Now then, the competition. I'm going to give you a link above my head and down below in the description. You might want to look at this and look at compare the competition's margins, primarily the margins, see how it compares. All right, the ownership. Now, insider trading. Insiders have been selling the stock. They bought 5.8 million over the last 12 months, hardly any at all, and sold 492. 492. The good news is, and don't forget, big companies do have where they what they do sell. I mean, Google are always selling on the inside. And every time we've seen it, and I've reported this and I've learned to my cost, I've reported saying, oh, okay, insiders are selling on Google, the price is going to go down, and it keeps on going up. Big businesses like this can sell millions of shares inside. It's part of taxing, part of basic structure that they do regularly. It just looks so dramatic, but actually they can afford to do it. But what is interesting though is the most recent is we're buying back in again. Always nice to see. So there you go. We're buying back in again. So 5 million US dollars has just been bought in here, and this was done by Ramesh Ramaswamy Sridhar. That name rings a bell. Do I know that? Do I know that name? That name rings a bell to me. Anyway, it's for some reason I'm thinking I know that person. Anyway, so look, we've got people buying back in again. Not too much, but the beginning. And that's recently. That's March the 25th. That's just a couple of days ago after this news came out. So I can't. That's encouraging too. I don't mind this. Because we're now starting to see buying-ins coming in again. Maybe this is the start of a trend of investors buying back in on the inside. So it's a buy from me. Like I've said, how to buy it. Let's carry on. Short interest, no short squeeze. Hardly anyone is downing this. Now that's interesting because AI that is expensive can have a short interest element attached to it. And there isn't one. So people don't really want to bet against it. They don't want to bet against it. And that's really, really important. That is an important point. And normally I don't do this, but I'm going to do it anyway. If we look at NVIDIA, say, for example, another tech stock, not the same, I agree, but nevertheless, I want to share with you. Now, we know, look at this, look at NVIDIA, look at the S-curves, all of this, right? Let's see if there's any short interest there. Because when a stock is really overbought, it can have some short interest. Look, it doesn't. People are really believing in AI. When a stock is massively overbought, and let's be honest, NVIDIA is, no matter how good you think it is, it's great, but it's being bought for the future. It's got 1%, 1.26. So as you can see, going back to our original stock, here is we don't have much short interest because people really believe this is the way forward. So that's interesting. So one, you're not going to get a short squeeze, but also you're getting no real downward pressure. It's all up. So it's still a buy from me. Let's have a look. Now, this is important. This was a month ago. I'm going to cover it. It had its worst day ever. Let's see what this was about.
First, ARM's up almost 180%. AMD up 87, Salesforce, up about 50 or so. Snowflake was up 40 something heading into that print last night. And that's our chart of the day for what you may, understand to be obvious reasons. As you take a look at the stock here, it's down about 20%. Stephanie Link owns this stock. She's been buying it lately. She joins us now because it's the worst day ever. At least it's on track for that, Steph. I think you're a little nervous going in and maybe a little upset coming out.
I am a little upset, but look, I think the stock, as to your point, it has rallied a lot. I only bought a small position. I know it's a volatile stock, and so I was looking to buy on weakness. This today is definitely weak, and I will be adding to it when I can. No question about it. The guide was disappointing. The CEO leaving, although he will be the chairman. The company's in the penalty box at this point in time. I get it. Maybe for the next couple of quarters, but long term, the big picture has not changed. The total addressable market for them is $248 billion. They have new products. You need data to support AI and to make AI better, and they have it. And they have, again, a whole slew of new products coming. Their bookings in the quarter is the reason why I have conviction in the long term, because bookings actually grew 33%, up from 25% sequentially. And they just signed the largest deal in the company's history, a $250 million deal for 5 years. So I'm not happy, obviously, but I am going to add because I do think the long term still makes a lot of sense. Yeah,
I think, Brad Gerstner of Altimeter has been tweeting a lot about it this morning. I think it's fair to say he's a little frustrated by the quarter. Obviously is still a long-term believer in the story, acknowledges the good and the bad. He would agree with you, obviously, with the as he characterizes it, massive Q4 bookings, best-in-class free cash flow margins, he cites. They do have the new CEO, Sridhar Ramaswamy, who, by the way, we visited with, may have been his first time on CNBC several months ago in our AI special out in San Francisco. So Slootman moves to chairman there. He does take issue, does Gerstner, with their comms department, maybe not articulating the story in the best way. That's my interpretation of it, certainly not his, but he thinks it's too conservative, maybe very conservative, but time will tell.
It is conservative, Scott, but I think a new CEO should be conservative. So we were expecting 30% product revenue growth. We got 22 for the full year. That's, I think, very conservative considering what they have been putting up as of late. But I do think you have a new CEO who's trying to get at the lay of the land. They actually had 2 disappointing quarters last year, and they are trying to avoid that. Consistency matters. And so, okay, let's just slash the numbers and let's see what happens. And again, having these new deals, having these new products, I think makes a lot of sense and gives them momentum for the long term. And yeah, free cash flow margins are actually going to be for 2025, for fiscal 25 rather. I think they're actually going to be a little bit better than expected. The guidance actually is a little bit better than expected. And so they have to spend a lot this year. We have to wait and see on the demand side. But I really do think this is a great player in the long term.
Steph, thanks for making time for us today. Really important to hear from you on the other side of these earnings.
There you go. So there's the thoughts there. So that's what I'm just said. This is a volatile stock. And what you're doing is if you have say $1,000 and you buy a couple $100 now, you don't go all in. This lady here was able to then buy more on a dip. She's frustrated, but I wouldn't be frustrated and I wouldn't be surprised. That's how this stock trades. She bought it thinking, oh, it's just going to keep going up. I never think that. I never expect anything. I'm always expecting the worst, but prepare for the best. So, you know, I'm going to allocate this. You can see it's a volatile stock. She said that right at the beginning. So what I'm doing, if I'm buying this, if I was buying this, and I would say now it is a buy, I would wait for, I would just put some of my money in and wait for those moments. And if you don't get a drop and it runs away, so what? What you've allocated is going to go up, right? That doesn't matter. Don't get greedy. And this person here was able to then buy the dip, and that's great because they got money on standby to do it. So don't go all in and then got no money to. This stock does trade with volatility. I can see it doing well in a few years' time, so don't go all in. There will be moments like this. So I can agree. I think that explains that. Anyway, not the last 90 days. It's neutral news. Not that much to say about it, really. Last 30 days, more neutral news. Last 7 days, that's unusual. I don't normally see that. I normally see a bit of neutral, positive or negative. This is just neutral, sideways sort of sentiment. Okay, be interesting to see when my video comes out how this ranks on Google and YouTube. Anyway, there's my thoughts. I'm going to give it my final thoughts now. What do you think? For me, this looks quite good. I like it. It's a sort of company that I like. It's a sort of thing that I like. But now it is not a bad time to buy it. I think you've got that. I think you've got that nice. You can see why she bought it in around here. This is kind of sort of building a bottom, if you like, a stable platform here. And now is not a bad time to buy it. But I wouldn't go all in. If I had $1,000, I'd say I'd put $800 in. $200 in, keep the other 800. Every couple of percent, buy a bit more, and then if it drops 10%, then the remainder of the money, and then I'm in, and I'm done, and then I can just sit back and watch it grow. And I think it will over the next couple of years. I quite like that. I think that's all right. So I'm going to give this a buy. This was requested by, who was it requested by? It was requested by Robbie Cooper and Stacey Bailey. I like it. This is one for me. Of course, hypothetically, I'd buy it. I only own the S&P because I don't want to be impartial and own stuff and pump stuff. I only own the S&P, period. That's it. But for me, I would be interested in buying this and in the way I've said. So it's a buy from me with a spread allocation, not go all in at once. And then you'd be just like this lady here without being upset and surprised, because a dip wouldn't surprise me. But I don't think there's much more of a dip to come now. You're near the bottom if we look at the history of it, but that doesn't mean to say that we're not going to get lower lows going forward. But there you go. That's my thoughts. Click above my head for more links. Down below in the description, you'll find the link to my software. You can go and check it all out. My members can use a free version of it or a paid version of it. It's entirely up to you. And over here, I'll put more reviews as well. There you go. I've reviewed about 130 stocks now, I believe. God, can you believe it? Until next time, as always, take care of yourselves and each other.